All right, today we're going to break down one of the most powerful trading systems out there, Mark Minervini's method for achieving what he calls stock market superperformance. Our goal here is to really deconstruct his entire playbook into a clear, simple blueprint that you can actually understand and use. Okay, so let's dive right in. We're going to build this whole thing out in 5 key steps. We'll start with the mindset, which is crucial. Then we'll lay the foundation for a great trade, figure out the perfect timing, nail the execution, and then wrap up with maybe the most important part of all, survival through rock-solid risk management. First things first, Minervini says that before you even look at a single stock chart, you have to make a huge mental shift. You've got to stop thinking like a passive investor, someone who just collects stocks, and start acting like a proactive hunter who stalks very specific high-potential opportunities. Now, the heart of his entire philosophy is something he calls SEPA. That stands for Specific Entry Point Analysis. See, this isn't about just buying a great company and hoping for the best. Nope. It's a super precise method for finding the exact moment to get into a stock. And it's all based on hard, quantifiable data. It's all about timing. So, what are we hunting for exactly? We're looking for stocks that have what he calls the 3 Ds. First, the growth has to be dramatic. We're talking earnings and sales jumping 25% or more, quarter after quarter. Second, the stock's price move has to be decisive, a powerful breakout on huge volume. And third, the company has to be dominant, a true leader in its industry. These 3 things, right there, that's the DNA of a potential monster stock. All right, so now let's build on that and talk about the foundation. Before you even think about when to buy, there are 2 pillars that absolutely, positively must be in place. If you're missing even one of these, it's a no-go. You just walk away. Pillar number 1 is the trend. You only, and I mean only, buy stocks that are already in a clear, confirmed uptrend. Like Minervini says, the trend is your bodyguard. It's there to protect you. Pillar 2 is the fuel for the fire, the fundamentals. You're looking for explosive, accelerating earnings and sales. Think of it this way. The stock is the horse, but those massive earnings, that's the jockey driving it forward. Okay, so you've found a dominant company, it's got killer earnings, and it's in a beautiful uptrend. The big question is, when exactly do you pull the trigger? This is where we get into the real secret sauce of the whole method. He calls it the volatility contraction pattern, or VCP for short. And this is his signature setup. Stocks don't just go straight up, right? They move in waves. A VCP is that specific quiet period where the price swings get tighter and tighter and tighter. This is a huge tell. It's a sign that all the sellers are gone and the big institutions are quietly soaking up all the shares. Honestly, the best analogy for VCP is to think of a powerful spring being coiled tighter and tighter. All that potential energy is being compressed into a tiny space, just getting ready for a massive, explosive move up. So here's what that looks like in practice. You might see an initial pullback in the stock of, say, 10%. Then it rallies a bit, and the next little dip is shallower, maybe only 5%. The final one is super tight, maybe just a 2% wiggle. Each of those contractions shows that the selling pressure is drying up, and it all builds towards one specific pivot point. That is your perfect low-risk entry spot right before the big breakout. So you've got the right stock. You've identified that perfect VCP pattern. Now it's go time. This is the moment of execution, where all that homework turns into real action. But just seeing the pattern isn't enough. You need a hard and fast rule for when to jump in. The good news is the entry rule is refreshingly simple. You buy the stock the moment it pushes through that VCP pivot point, and you got to see a big spike in volume to confirm it. That's it. But here's the real insight, and it's so important. Buying is the easy part. The truly difficult skill, the thing that separates the pros from the amateurs, is knowing exactly when to sell. And that brings us to what is without a doubt the most important part of this entire system. Because here's the truth. Your long-term success isn't decided by how big your winners are. It's decided by how well you manage your losers. This is professional-grade risk management, and it's how you stay in the game. These are the golden rules, and you can't bend them, ever. First, before you even buy the stock, you set a tight mechanical stop loss just below that VCP pattern. If the price hits that level, you sell, period. No emotion, no hoping it'll bounce back, you just get out. Then, as the stock starts working for you, you use a trailing stop to lock in those profits as it moves higher. And here's how that risk is managed across your entire portfolio. You never ever risk more than a very small fraction of your total capital on one trade, usually around 1%. Why? Because this rule makes it mathematically impossible for any single bad trade to knock you out of the game. It guarantees your survival. But there's one final ingredient that really ties all of this together, and it has nothing to do with charts. It's the discipline to be relentless in analyzing yourself. Minervini is obsessive about keeping a detailed trade journal, not just what he bought and sold, but why he did it, and how he was feeling. This is how you find and fix the little leaks in your own strategy. And this quote just nails it. Looking back at your trades, the good and the bad, is literally like looking in a mirror. It forces you to face your mistakes, see your bad habits, and stop making them over and over again. This is how you really get good at this. So let's bring it all home. Here is the entire system in one final, simple checklist. Your goal is super performance, and your method is SEPA. The fuel is those explosive 3D earnings. The foundation is a strong uptrend. Your timing signal is the VCP pattern. And your survival, your career as a trader, depends on strict stop losses and position sizing. And that leaves us with one last thing to think about. What's actually harder for most people? Is it having the discipline to cut a small loss without even thinking about it? Or is it having the patience to sit on your hands and let a winning stock run to massive gains? The answer to that question tells you a whole lot about your own trading psychology.